How powerful is the crowd? Did you ever stop and think just how powerful a large group of people can be and what they can do? And if you can harness them for your business, what you could accomplish? Well, I read a story this week about a couple young guys that put together a watch company. They crowdfunded the money. We'll talk about that at the back end. And they sold the company for a massive amount of money. And we'll talk about exactly how that happened. I want to first give you a little insight to a little bit about how the whole crowdfunding world works and what money that gets organized from the crowd, what happens. First of all, you have to understand that the government is not enthusiastic when somebody, usually a person called a promoter, takes money from regular people with the intention of making money or doing something that is investment driven. That's called a security. When you create some kind of a situation where you're going to be responsible for making money for other people, you've taken their money, you've created a security situation that requires attorneys, and usually the Securities and Exchange Commission gets involved, all these different federal agencies, because in 1929, a lot of people lost a lot of money and they started the SEC and they didn't really ever want that to happen again. So it's very complicated to take money from other people. That, by the way, has been my business for the last 30 years, is running the hedge fund, the venture capital. And when I speak to audiences, I explain some of the things that are required here. But understand that taking money from other people creates not only a tremendous responsibility to those people, but also to the government, because you're taking money in a security kind of relationship and you're taking responsibility for other people's money. So here's what happened. The government in 2012 passed legislation that would allow more people to participate in investment activities. I mean, right now we have a stock market. People can invest in the stock market. All that is carefully overseen. But on the heels of the really bad market activity in 07, 08, the real estate crash, entrepreneurs couldn't get their hands on any money. So the government said, maybe we need to loosen up the rules here a little bit and make it possible for entrepreneurs to get some money. So what they did is they said that investors could crowdfund deals under certain circumstances. Now, there are three different kinds of crowdfunding. You've probably heard of two kinds. Maybe you haven't heard of the third, and the third is really the big one of all of them. But the first one is donation crowdfunding. That's where you give a donation. That's a GoFundMe. Grandma dies. There's not enough money for a funeral. So everybody chips in, or there's somebody's in an accident, everybody chips in. It's a wonderful thing. It's not that different from giving money at the church, except no tax deduction for you. So you have to be very careful not to do that. The second one is called donation and reward. You make a donation, and then if somebody's successful at making a product, for example, then you get a reward. So let's say a filmmaker wants to make a film about dogs. They go out to all sorts of people and they say, hey, listen, do you like dogs? Yeah, gee, I love dogs. Great. Well, I'm making a film about dogs. Would you donate $20 and help me to make the movie about dogs? And if I'm successful making this movie, then I will give you a copy of the movie when we're done. And that's called Indiegogo, Kickstarter. These sites have become very large. I think they're doing $10 billion a year between the two of them. So a lot of money is moving into the hands of people who want to do these projects. And if you've never done a Kickstarter, it's a lot of fun. I back a lot of these campaigns. Not all of them work out, but it's a lot of fun for the ones that do. And the government does not oversee these kinds of deals. You can't cheat. You can't steal the money. If you tell people it's for a certain purpose, you got to do it for that reason. But the government doesn't really oversee this, because these are not investments. These are donations. In fact, that's how these companies got around these rules, and that's how they get away with this, is they're not selling anything and they're not taking any investments. Consumers are making a donation. And if they get a reward, it's a bonus, and they don't always get the reward. When you go to the grocery store, the government doesn't want there to be any risk. So when you go to the grocery store, you bring a bag of groceries to the cashier. You put the groceries on the thing. The cashier rings them up and says, you owe us $20. You give them a $20 bill. They give you the groceries. The transaction is done and it's over. And that's the way transactions happen. There's no risk on either side. The consumer didn't take any risk. The store didn't take any risk. I mean, everything is very simple and everybody walks away happy. But in an investment, there's risk, and the government is very concerned about people taking risk. So they've established a lot of rules. The first two kinds of crowdfunding are outside of those rules. The third kind of crowdfunding is investment crowdfunding, and that means you can advertise for investors. It's a whole different world. That's the world I live in, and that's not the purpose of the story. But for today, there's a company called Movement, MVMT, watches. They're a watch company started by a couple of young guys, 26, 27 years old. And they built an affordable watch company where they could sell watches to millennials and other young people. And they built this company into a powerhouse, $70, $80 million in revenue last year. And they ended up selling that company just last week. It was announced for about $100 million. That was the first cash payment. And then there's also a success payment that if they do well, they could make another $100 million, which, by the way, after tax is only $170 million. But they did pretty well, especially when you consider these are very, very young guys. So what ends up happening is, how'd the money come to be in the first place? How'd they start their company? These guys did a crowdfunding campaign. They went on Kickstarter or Indiegogo, and they said, hey, listen, we're going to be selling watches. Does anybody want to buy watches? They put the watches out there, and people bought these watches. Now, they basically were like pre-sale. They pre-sold the watches. What they basically said was, hey, look, here's some watches. We're going to go get them manufactured. If you want one, you can buy it, and hopefully we'll succeed in manufacturing it, which they did. And apparently they succeeded brilliantly. And they put this company together. Not every company, by the way, has succeeded brilliantly. And that's a story for a different day. But they put this company together. They raised $300,000 and they were off to the races. The beauty of this, it's not only the $300,000, it's that they were able to demonstrate that they had a successful idea, that they had something that consumers wanted with this Kickstarter campaign that they did. So this was a very powerful mechanism, and it's a great way for anyone, any company, large companies, small companies, to test their products. Because if you can get people to buy things online and commit to being a customer, imagine what will happen as you do your rollout. You'll have just an established base of customers long before you ever go live. So it's a really powerful way. It's not just about money. It's also about market testing. There's a lot of impact to the whole crowdfunding campaign. And the bottom line is you're organizing and harnessing the crowd. And you're getting the crowd of people to get behind you to say, you know what, we really like that. We want to see this product come to market. We want to see this project come to life. And if you can do that, the money flows in and you're off to the races. And then, of course, you have to do a great job of running the company and doing all the things that you're supposed to do. But this gives you a huge, huge head start. So what's the advice? How can you benefit from the years of insights and strategies that I have from building all sorts of companies? And how can you ultimately profit from the inside? Here's the deal. There are lots and lots of different ways to skin the cat. There are a lot of ways to test markets. There's a lot of ways to get money. There's a lot of ways to sell companies. There's a lot of ways to make things happen. You just have to do them, and you have to be smart to what some of your alternatives are. And if you're not paying attention to alternatives, especially watching government legislation frequently drives the changes in our economy and in our environment and in our marketplaces. So you have to pay attention. You have to get surrounded by experts, and you have to be in the know, because otherwise you're going to be left behind and innovation is going to escape you. So all those together, make sure that you're paying attention, make sure you're on top of things, and make sure you're surrounded by experts. Give me a call if you have a question about that sort of thing. In the meantime, I hope you will profit from the inside.